Your market news now. Investors expect the Federal Reserve to raise rates by 25 basis points, followed the day after by half a basis points from the Bank of England and the European Central Bank. Besides the central bank meetings on Wednesday, we have key ministers from the Organization of Petroleum Exporting Countries and Allies, led by Russia, known as OPEC+. They will also be in focus. OPEC+ panel, they'll be meeting on Wednesday, but it's unlikely that they will tweak the oil output policy. Locally, though, packaging group Nampak has secured an estimated 500 million rand in annual working capital in a move that alleviates its cash crunch and will consequently reduce the quantum of the proposed rights offer to 1.5 billion rand from the initial 2 billion rand. At some point today, the share price was down about 14%. To talk to us about the latest, though, when it comes to market dynamics and also what we can expect, we are joined by Michael Traherne, who's from Vestec Asset Management. Michael, thank you so much for your time. So Asian markets are open. We had China coming back online after the Lunar New Year. How are you reading global market sentiment right now?
Yeah, overall, we had a very, very strong week last week, capped off by good gains on Friday. Market seems to be giving that back today, particularly as Asian stocks open up quite down this morning. But I think the market's more in a wait-and-see mode. As you mentioned, some very big market-moving data coming out this week from global central banks and large tech companies reporting their numbers.
I mentioned in my intro that Nampak released a trading update, but they've also released a new capitalization plan. I mean, I'm not sure whether you're following the Nampak story, but how are you assessing what's going on here? Because a while ago, we had some of the influential investors expressing concern about the size of the initial rights issue. It was 2 billion rand versus the market cap of the company, which is just under 1 billion rand.
Yeah, I mean, Nampak's in effectively a fight for its own survival. It's got over 5 billion rand in debt, and the current market cap as of about lunchtime today was 700 million rand. And their rights offer now has gone from 2 billion rand to 1.5 billion rand, but that's still more than twice its current market cap. And effectively what they're saying to shareholders is, for every 1 rand you've got invested in the company, we would like you to send us an extra 2 rand so that we can keep the lights on and the business operating. Not helping their cause was the market update that they gave today, where they said revenue had grown nicely, but profits had fell due to a whole bunch of reasons. And unfortunately, if profits are going backwards, you're going to need more and more money just to keep the lights on, and particularly just to pay down debt.
Let's look at, the U.S. tech companies. They've been announcing a whole string of layoffs, but it was quite interesting to see the market reaction on the back of those layoffs, almost as though the market likes that news that you're going to be cutting costs. How are you looking at those U.S. tech layoffs? And let's bring in Naspers as well, saying that they're going to be cutting about a third of their workforce. Yeah,
I mean, I think particularly for the U.S. Tech firms, their layoffs are about the equivalent to 3 months worth of hiring. So it looks like a big number of people that they're laying off, but in reality it's actually a very small part of their workforce, and it's recent hires that they're letting go because the market has changed so significantly over the last 2 years. These tech companies with very low interest rates and that are growing really quickly due to COVID went on this massive hiring spree, probably getting ahead of themselves, hiring probably labor that they didn't need, and that's becoming more expensive. And now that costs are going up, they have to reevaluate how their cost structure looks. So that they're laying off. In Naspers/Process's case, it sounds like they're going to lay off about 10,000 workers out of their 30,000 global workforce. We're still waiting for exact numbers. But this is just a realignment of size. With interest rates going up, you can't justify having a massive cost base that's potentially being funded by cash that could be going back to shareholders.
Let's stay with that theme. With the U.S. theme, you have Goldman Sachs CEO, taking a 30% pay cut. How does that stack up relative to his peers, especially from a salary perspective, even from a performance perspective when the earnings came out from the banks?
Yeah, I think he'll still be okay though, Nastasia. He's on track to earn R500 million in compensation this year. So I don't have too many sympathies for the guy. But that's how it works in that industry. You have years where you make massive profits and your salary looks like that. And then there's years where things are tough and profits drop significantly, and these guys' bonuses match that. In the case of Goldman Sachs, they had a retail division that was lending out money that was making big losses. And that's why they're not paying a big bonus out, because there's less money to pay a bonus from. But all the other big US banks, a similar position where CEOs aren't getting raises, are seeing bonuses cut as well. And the reality is high interest rates means less deal making, which means less income from investment banking. And the bonus pool is just smaller. But like I said, these guys are okay and generally earning $20 to $30 million a year across all their different remuneration packages.
Before I let you go, we've got Fed interest rate announcement. What are your expectations and what will you be looking out for?
Yeah, I think it's less about what the Fed does. I think it's pre-baked that they're going to be raising rates. The big thing will be, do they indicate that they've done enough, or are they going to play hardball and say that they expect to have significant rates in the future? So far, the market seems to be calling the Fed's bluff in that the Fed says they're going to play hardball and the market says we don't believe you. But that tune seems to be changing from the Fed. And if they say we think we're close to the top, expect markets to rally on Wednesday.
Right, let's leave it there, Michael. That is Michael Traherne from Vestec Asset Management. And as he says, we are awaiting that all-important Fed meeting, and we'll unpack what it means for the U.S. economy as well as for those interest rate hikes, especially the pace of interest rate hikes. But we'll also be unpacking other central banks that will also be announcing interest rate decision during the course of the week. That is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.